Earnings drive stock prices. We have said this repeatedly in many previous video updates. But lately, earnings have been driving stock prices to record-breaking levels, and with the fourth quarter economic growth rate about to more than double, record-breaking stock prices could continue. The newly enacted $1.2 trillion infrastructure law adds stimulus to an already strong U.S. economy, and the unique times we are living in could result in what economist Ed Yardeni calls a market melt-up. Here's a 3-minute video about what's behind the recent surge in the Standard & Poor's 500 and why, despite its recent record highs, stocks are poised to climb higher still. This is a chart from Dr. Ed Yardeni, one of Wall Street's most respected economists. Dr. Yardeni calls these lines earnings squiggles. Each squiggle represents the change in earnings projections made by Wall Street analysts for each quarter of 2021, from April 2020 through early November 2021. The green squiggle shows the sudden surge in earnings expected from the S&P 500 for the third quarter of 2021. When third-quarter earnings reports came in better than expected, consistently, Wall Street analysts revised their expectations sharply higher. A surge erupted just as the majority of companies in the S&P 500 were reporting their third-quarter earnings to shareholders. Now, more than 80% of the companies in the S&P 500 have reported their third-quarter earnings, and fourth-quarter earnings will start to be reported shortly. And they are likely to surge again, which could ignite a market melt-up. There are two main rules of stock market investing. Rule number 1 is that earnings growth drives stock prices, and rule number 2 is that economic growth drives earnings. The economy is expected to grow by 4.8% in the fourth quarter, more than twice as much as the 2% growth rate of the third quarter. That's the consensus forecast of the most recent poll by the Wall Street Journal of 60 of the nation's leading economists. As a result, it's reasonable to expect earnings growth in the fourth quarter to surge again and grow even more than in the third quarter, which was hobbled by the Delta variant. As the post-pandemic expansion strengthens, and with the pandemic's effects rapidly fading, stock prices could surge beyond recent record highs. Predicting stock prices is impossible to do reliably, and this is not a prediction. It's a warning that a market melt-up is possible. Further brightening the already upbeat outlook is the new $1.2 trillion infrastructure law, which will further boost economic growth in 2022. Positioning yourself to benefit from a market melt-up is a timely investment idea that requires knowing your financial and tax situation, and we can advise clients on.